accounting. What are the opportunities for a chartered accountant in fund accounting and its compliance? It will be dealt by CA Uday Shah. I request our past Deputy Convener Sikandar Yadav to briefly introduce him.
Thank you, Vijay bhai. It is a great privilege and honor to introduce our second speaker, CA Uday Shah. He is a chartered accountant and technology practitioner. After qualifying as a chartered accountant in 1987, he began his professional journey with a CA firm focused on bookkeeping and direct taxation. However, within 6 months, he found that true calling at the intersection of the finance and technology. This led to him foray into the development of financial accounting software. A move that laid up the foundation of a career dedicated to leveraging technology for business solutions. With early success in developing and marketing in-house financial software, he expanded into industry-specific verticals like Mazel in 1992, a comprehensive software solution tailored for gem and jewelry industry, serving both B2B and B2C enterprise. Then in 1996, Capital, a specialized software for the financial sector, offering solutions for discretionary, non-discretionary portfolio management services, that is PMS, alternative investment funds, AIF, global funds, family offices, FPIs, and HNIs. Both Mazel and Capital have received strong acceptance in their respective industry. Currently, he serves as a managing partner at Kruti Services, a software development arm, and tech head at Kruti Software Consultancy Private Limited. Now, with this brief introduction, I request past convener CA Vijay JM sir to present Momento. Also, I request CA Vandana Dodia to present CAP of Received Funds on behalf of Study Circle. Now I humbly request speakers sir to start the presentation. Thank you.
Yes, over to you.
Thank you. Thank you very much, Borivali and the OBs of this to give us an opportunity. Nilesh bhai set a good tone to this entire event, whereby yes, we see how to enhance the practice areas. Technology has been our forte, and that's where we are probably going to share what we can do. A difficult question, and yet anybody into fund accounting? I have a friend who was, now he is not there. Is he there? He just gone. So anybody into this fund accounting?
Fund compliance.
Fund compliance, okay, wonderful. So I guess some knowledge is there. But of course, for the larger audience, this is one of the very growing practice area. The industry is growing very fast, and I think so. This is something which everybody can have a look at. May not be everybody can get into it, yeah, because it has its own nuances. You need size and effort, but can be considered, and there are a lot of opportunities into this. Please. So, any idea on to fund accounting other than those who are having what is a fund or fund house or etc.? Anybody who knows it? Okay. So, fund, of course, we all know mutual funds, whereby the funds are assimilated from n number of users and invested into so that the money can earn. Now, fund accounting or fund is a common term for this purpose. Mutual fund is one such avenue. There are many such avenues, and all these are growing avenues. And while it is not very easy for a small medium-sized firm to get into mutual fund as a provider, but certainly we can get into the other spheres or other areas. So a fund house is typically one who floats, or it's a fund management entity which will kind of float schemes the way we have in mutual funds and market those schemes, collect the money, invest the money, and their revenue is of course the fees that they would charge on that investment gain, etc. This is just as a small basis for you to understand. And one very important thing is the fund house itself is always separate from investment vehicle. Yet again, giving an example, mutual fund scheme per se is different from the fund house. So unit trust is a fund house, and the schemes below it, including unit 64, are separate entity per se. They are accounted separately, they are managed separately, though under units or unit trust of India. Okay. As far as this audience is concerned, we are small, mean, tight. Please feel free to shoot questions whenever you want, understand whatever you want to, and I will try my best to give you answers on that. So, a typical fund accounting has two things. One is fund management entity and another is the investment vehicle. And then of course, what would come as an avenue. But prior to the avenue, yes, let us share the context. So, of course, we know mutual funds. We know, I don't think so, we know any other. AIF is a SEBI registered investment avenue. SEBI regulates it. In fact, every of this is SEBI regulated. But AIF is one such space which is SEBI regulated and growing at the fastest pace. Okay. For all you know, we'll see it overriding onto mutual fund because mutual fund has certain limitation which this form will kind of clear it off. Okay. SIF is going to start this year. SIF is a smaller brother of AIF whereby you can invest a smaller amount but larger than mutual fund. Mutual fund I can invest 100 rupees on daily basis, etc. etc. AIF comes with a tag, you have to invest minimum X. Okay. SIF is say half X. Okay. I'm not giving you values because that is SEBI regulated. Today it is X, tomorrow it will be Y, it does not matter. But okay, AIF starts at 1 crore. SIF is supposed to start at 25 lakhs. Okay. Then you have a large avenue being created by Gift City. A lot of funds are coming into Gift City and then investing either in India or outside India. All these are also covered within the sphere of fund accounting, or they are fund houses. Okay, so they could be two tier. One, fund sitting in Gift City and investing outside India. Fund sitting in Gift City and investing in India. Okay, large amount of money is rolling in and it's growing by sizes. I will see the numbers shortly. Global funds. So, yeah, please.
So just wanted to ask why in India we don't have any REIT or InvIT funds, and whatever are there, they are only in the real estate. Why no other industry or areas?
So, as of now, the floated is these two schemes by SEBI. I'm sure as the time matures, SEBI will come out with more such venues. But if it is not this, you can always cover it under Cat 2 or Cat 3. So, okay, a brief about Cat 1 is mostly social or infrastructure projects that it will fund. Cat 2 can do more variety. It can be invested into private public area, etc. Cat 3 can invest into stock, listed stock, and otherwise Cat 3 can do HFT. Anybody knows HFT? Algorithm based trading, okay, whereby trading happens at the speed of seconds. So in a day they might cover a volume which is probably 20-30% of the BSE volume for the day, and most of these HFT funds are doing excellent.
So Cat 3 can also act as an angel investor in IPOs?
Yeah, it can. I think so. Even Cat 2 can do that.
Cat
Yeah. So then, as I said, there are global funds. So what Nilesh Bhai said, sitting in India, we have opportunities outside India. We can do all of this, where most of the world does not understand how do we do accounting for that. And Indian minds are too sharp to be able to manage this. Plus, we have, should I say, tenacity to manage this size and volume, which others don't have. I think so. This is something which everybody should look into. Sovereign wealth funds. There are funds which are from sovereign countries in India and also outside India. Mauritius, Singapore are the hubs for it. Now Dubai becoming a hub for it, and work is easily flowing for anybody who is ready to take. Only thing is, yes, somewhere down the line we'll understand fund accounting is different from business accounting. So let us not go with a mindset that I am doing business accounting, I can do fund accounting. No, it's a specialized area. Hedge funds. Globally, whatever we covered under, all this is covered under hedge funds. That's it. And organizational structure over there is far more simpler. Volumes, of course, are high. Value chains are super. So it's a good opportunity area, which if you create a practice, and there are CA firms which are either doing only this or it's part of their practice. Okay. FPI, foreign portfolio investor, it could be an individual, it could be a body corporate, any such thing. Accounting is different than what you do as your own investment accounting. Because if I'm a foreign portfolio investor, I need to understand exchange gain loss. And how do I book for those exchange gain loss, at what instances we should do it. Nuances of that are not to be covered today, but can be taken offline. Okay. Sorry. Can this come over here? Okay, I think so. I'll manage from. What we are seeing as a graph is just about domestic fund and money invested in Cat 1, Cat 2, Cat 3. From 0 at 2013, the fund size is 12 lakh crores Indian rupees in 2024. 2025 numbers are yet not fully published. Okay. This is pie chart of what is the specification, and the major money is gone into Cat 2 and Cat 3. This is the value of funds sitting in GIFT City as on March 23, and it's increasing. 3,78,000 millions. And this is Indian rupee. I have converted in Indian rupee so that we know and we can absorb them. Key opportunities for a CA in this space. So one of the thing is structuring and formation. We'll cover all of this in detail, but structuring and formation, as I explained earlier, is for two-tiered structure. One is fund house or fund management entity, and second is for investment vehicle. Oftenly it could be multi-tiered also. I'll just touch on that. Legal and tax registration, I think so we all know better of this. Investor onboarding and investor accounting. investment accounting and valuation. I'm not going into detail right now because more depth is coming into this waterfall and distribution. I will explain this as a concept. Compliance and assurance. This is age old. Only thing is definition of compliance and assurance changes when you are out from business accounting to fund accounting and tax compliances. So, opportunities in structuring and formation. As I said, there is two-tiered this. Designing of a fund is very important. How will it be designed? What would be a fund entity? Mostly private limited or public limited, something like that kind. But investment vehicle, based on the category of the fund, it could be a trust or LLP, based on number of investors, based on focus area that you are having. Okay. Okay. Just a small caveat before I go further into it. This entire thing has been given with domestic fund, but same opportunity applies to global funds also, almost, except structuring, we may not be able to participate because these funds are floated outside India. So we may not be, unless we have our own associates into it. But any other thing there beyond, yes, can be done by us. Absolutely no issue. Okay. A flavor of investment vehicle is, you can say, there are two-tiered structures. One, which is onboarding investor at a lower level, and the entire fund is then passed on to another fund. So it's called master and feeder. Feeder fund will accept money from n number of investors, consolidate and put it into a master fund. Why do we do that? The master fund is very tax efficient. That's the bottom line. And all the compliances etc. can happen at feeder fund level. वो क्या बोलते हैं, एक वॉल्यूम का गेम है, वैल्यू का गेम है. This is what it is. And lot of large players are into this kind of a methodology. Documentation. There are host of documents that come into play during this stage. And they are once done, mostly they remain static. Similar to our MOA, AOA, only thing is MOA, AOA, we just do first three clauses and then balance everything is accepted. Here you will have to go into the nitty-gritties of each of this because it is directly related to the way you want to conduct business with your investor and your investment policy. Particularly PPM. The first is of course a contribution agreement, by and large standard, but PPM is equivalent to AOA, which is not standard. It qualifies what you will charge, what you will not charge, how will you charge. Then of course the flavors. In mutual fund we might have just two flavors. Dividend, growth. Dividend will pay dividend every year, every 3 months, 6 months, or there could be a liquid plan, and growth would be just accumulating so that it grows. Here, a single strategy. The fund with a single strategy could be earning the money, growing, etc. But there would be different classes of investors. So there is always a share class. A person who is bringing 50 lakhs and a person who is bringing say 5 crores or 50 crores is treated separately using different share class. He gets different treatment. He gets different debits or probably no debits. One very unique thing about the funds besides a mutual fund is the investment manager himself also deploys. He has his neck in the game, SEBI regulation. So he puts X value of the total fund amount. With an exception, he is not charged anything. His employees can put the money, they will not be charged anything. These are certain stipulations by SEBI so that investors are safeguarded. Certain nuances of this. Then of course there is investment management agreement. It's more like a policy document where I would invest, how I would invest, how much I would invest, whether there would be any sectorial. Of course there is a upper limit which has been specified by SEBI, how much you can invest in a sector, etc. How much exposure you can take in F&O, etc. But besides that, your IMA will decide. So all these three documents are very important, and as of now, it's majorly with law firms or probably two of the big fours. And it can be done at a lower level. Some of the CA firms are doing it. Formation. Formation, I guess, is something similar to forming a company or a partnership firm, depending on what structure you are sticking. But this also is a opportunity area. But this entire thing is a full bucket, is a very good bucket, because the fee is good. There is not much of competition except the law firms and big two or big three. So this is some area which everybody should look into. Investor onboarding. So once a fund is formed, investors are onboarded into the fund, and the best portion is mostly it is outsourced. Most of the good funds will not do it on its own, and there are reasons for it. Unlike mutual fund where I can do it online, here also online facilities are there. There are 2 or 3 SEBI approved platforms, but there is a lot of groundwork which happens even after online registration. The KYC, PMLA and screening through all the negative list is a good work area, typically handled outside because nobody wants to do panga with their investor. And my CA to your CA, if the fund is coming from abroad, my CA to your CA, they will manage. I don't get bad, my investor is happy, the 2 CAs are managing. But it is a very important area. And re-KYC is mandatory depending on the fund size, the investor size, etc. So all this is a good area, and as I said, mostly outsourced. Something which can be looked into. Of course, besides that, of course, there is a risk-based due diligence that is necessary, and documentation. So the investor agreement, etc. needs to be done. Okay. Investor accounting, and the next is of course investment accounting. These are the 2 most important pillars of the fund accounting. So while I would say investor is capital brought in, so it's kind of capital brought in, but no, it is not as simple as that. For reasons, A, investment may not come in one slot. So that brings into the play something called series. Mutual fund, I am investing today. Fair enough, I'll be getting units on the basis of NAV today or tomorrow, max depending on the time slot when I enter. Same will happen 2 days after, same will happen 3 days after. Whatever is the current NAV, that's about it. As far as these funds are concerned, they don't work on that basis, though allotment of units is on NAV. What is normally introduced is series. All the allotments normally are once a month because these are volume games. Every month, probably you might see a new series starting, and the idea is to be able to generate and compute NAV for as many people. It's a very complex process, We'll see it when we come to investment accounting. But all incomes and expenses are accrued at each unit holder level, or rather I would say distributed at each unit holder level every day. So if you have say just 50 investors, 3 expense heads, audit fees, administration fees and management fees, you are doing 50 into 3 into 365, so many entries. It needs to be automated or well structured so that you are able to declare daily NAV, because most of these funds will work on daily NAV. Few of them will work on monthly NAV. Okay. So this is huge work even for a small size fund. Normally there is nothing like small size. But the minimum ticket size is 30 crores.
So here it is not at master level, it is all at feeder level only in India.
No, we have master feeder.
Okay, so then entries are being posted at master level.
Both levels it will be posted. The feeder will post its own expenses, the master will post its own expenses. Master level expenses would be less, but accruals of income will be at master level. So that's where, yet again, work is there in both the sphere. Okay. So raising of capital or contribution, as it is said in this, is a task. Suppose I have committed my 5 crores. I'll not pay it upfront. It's staggered. So there is methodology whereby you raise, you seek, it comes and you allot. And this can happen for long periodicity. Normally the first closure, as we say, when a fund start is 2 months away from start of the fund, because this is what is there. Unless of course it's a sovereign fund or a single investor fund. We have seen a single investor fund starts overnight, no issues. Okay. Allotment of units, and as I said, series accounting is a complex this, but it's a good thing for CAs to get into because we understand what it is. If the fund has come later date, we know how to account for it and we know how to proportionate the income and expenses to that particular fund which has been received on later date. So it's a very highly specialized, we can manage, and only probably very few of us can manage. There's not many people, accountants, it is way beyond accountants. They cannot understand how it occurs. Yeah, please.
So this accounting is being done manually or using the softwares that you have developed or some other in the market?
So, okay, there are, I think so 3 to 4 software. Domestic, we have 3 software, 2 international software which work. Then there are host of CA firms which are working on Excel, or they are doing shadow computing on Excel. That again, yet again, it's a salute to CAs only because CAs can do it, but definitely it is prone to error. So somewhere down the line we are talking about shadow NAV. So one being driven by, say, RTA. Now RTA is mandatory, which of course is not part of our role. So one is being done by RTA, one is done in-house, and third is done by CA, shadow NAV, which is a good assurance practice because it does NAV audit concurrent. Please. I guess the number of people has gone down. Yeah, so as I said, accounting, and we started with investor accounting. Investor accounting and investment accounting, why they are 2 different aspects. Normally business accounting I would do one in single box. Capital comes in, I invest and start. I buy plant and machinery, etc. Thing continues. But here, many a times it is considered as two separate activity handled by two separate people. Even NAV computation, I said 3 tier, but otherwise both of them will compute their NAV separately and match it. And that is a daily match or whatever periodicity. Okay. So the industry says this is liability account because all of this is liability. NAV once declared, I cannot reverse it. SEBI would be on my head, and that's how it is. Statement of account, the most important client-facing document or investor-facing document has to go out every month. It's in a pre-stipulated, but every fund house will have its own flavor onto it. So there is a pre-stipulated information which has to flow out, and there is a flavor onto it. And why I have mentioned, because there are certain CA firms which are doing only this for certain fund houses. It's an activity and they are able to do yet again in Excel through macro, beyond my imagination, but they are doing, and they are doing it well.
So why they are doing manually when there are softwares for doing the same?
Cost benefit. And if you have a capability, so there are a lot of people, in fact I've seen this in a trusteeship company. So just a detour from, there is a CA firm which has floated a trusteeship company. So that's another revenue, but it has to be a separate unit by itself. But trusteeship is a big business. CA by default has an assurance, even though Nilesh Bhai says the certain secretaries are not seeing it very positively, the industry sees us very positively, and that trusteeship is doing Excel. But now that trusteeship is using Excel, why? Cost. Most of the Cat 1 funds are outside software system because the cost does not permit that. Thank you, boss. Reconciliation with RTA. Yet again part of an assurance whereby investor-wise number of units needs to be matched, mostly once a month at least. Okay. Then comes the investment accounting. So we all do some kind of a dribble in stock exchange and we buy and we sell. This is slightly different in many cases. Cat 3, yes, okay, I would have buy sell. But if I am an FNO player in Cat 3, I would be different. Then if I'm doing PC or VC, PE kind of a thing, if I'm doing RIT, it's totally different. So each kind of fund will have a flavor in itself. And yet again, our education and institute trains us sufficiently that we can easily adapt onto this. We see software is one side of it, but able to understand in terms of what is it, how should I go about it, what is supposed to be cost of investment and what is supposed to be an expense is something which is kind of ingrained to us. We see the transaction and we know what should be capitalized and what we should not capitalize. But anyways, this is one of the areas. So in VC, besides the investment cost, even for that matter in P, the legal fees, the assurance fees, everything becomes part of your cost of investment. Okay. Cash accruals and non-cash corporate action. That is something which is part of this investment accounting. You might have another flavors also. So there are people who do debentures, bonds, loans in Cat 2. Income accruals on daily basis so that you can compute your daily NAV, and income distribution on daily basis so that I will have investor-wise NAV. Okay. Valuation of non-listed assets is a big business. So there is a small note onto it, but it's a huge business and there are firms which are doing only valuation. I'm sure most of us know that. Okay. Here, yet again, NAV computation is done daily. This is asset side NAV computation, which should be at fund level. Here also you can have a drill at investor level. Reconciliation with custody. All funds are supposed to have custody and a trustee. They will not hold investment in their hand. It will be with the custody. You will have to do RECO with custody and exposure monitoring. A, base your own investment policy, base SEBI regulation and any other regulation basis, whether it is an Indian fund, domestic fund or a global fund. Anybody? Sorry. Anybody knows this? Waterfall?
Distribution of pooled investments. Not technical.
So you are right, almost. Waterfall occurs when I liquidate my investment. Whatever I earn over and above my cost is considered as a waterfall. This is a foreign name, they use it and that's how we have adapted it. But why it is complex? Because at this junction, the computation of performance fee, tax provision, basis whether it is a pass-through tax or it's a fund tax, comes in play before you distribute the money to the investor. Once you distribute, you cannot reverse it. So you have to do it. And very recently, a tax firm approached us just to validate waterfall and distribution of their scheme. So it's a very huge business and nothing complex about it because the business has occurred. The investment have been liquidated. It's question of, most of these funds have their own life, declared life, 3 years, extension for another 2 years, etc. At the end of it, they surely have to liquidate. And that's when. And there are times when SEBI forces you to liquidate if you are not compliant, etc. This comes into play. And the whole idea is you don't make a mess out of it in terms of either paying performance fee when no performance fee is due or adjusting minimum performance fee as assured in investor agreement, etc. And tax provision, because tax provision, if it is passed through, then for NRIs and etc. I will have to take care of. If it is not passed through, then I will have to take the tax provision for the entire fund before I distribute it. NAV audit we have already said. NAV assurance is the just rephrase of NAV audit. The most prevalent practice and a lot of CAs are already into it. And this work definitely comes at a mid-level and not necessarily at big 4 level. So this is something which we can do it. There are many of the funds which are doing shadow NAV. That means this is a perpetual work. Every day or every week you will get your data. You are computing parallel to somebody else's computation and you are periodically reconciling. Okay. SEBI compliance. And there are firms which are doing only SEBI work. They are mostly combination CAs and lawyers, but mid-sized firm doing good business. So these are few things that you need to do. Only 2 of them are annual, but otherwise mostly everything is quarterly. Okay. And this basket is ever increasing. Because last 2 years, 3 years, SEBI has been in a mode whereby every quarter it is just adding to the compliances. It has been after portfolio managers, now AIFs are also covered into it. Almost parallel is your compliance in IFSC. IFSC is a separate body. I am talking of GIFT City, but it is almost followed by, in fact, too many of us there are smaller brothers of SEBI in many of the countries. Nepal has SEBON. If you would pick up the document from SEBON, it's a copy of SEBI. Only thing is the values are little smaller considering their economy size. So that means your opportunities are just growing. You get into here, you will be able to do it over there. There is effectively nobody in Nepal who can do such a thing. Many such countries, I've just named one. ISA, of course, I guess you guys know better, but SEBI has asked all of these funds to be ISA compliant, annual reporting, business continuity compliance, and direct taxes and indirect taxes. Many of them, I'll pick this GST first, are not under indirect taxes because they may not be able to recover. I'm talking of investment vehicle. They may not. They consider it as a cost. But FME, definitely, they will recover there. They will be billing also, and they will have to do their GST compliances. Direct compliance, direct tax, everything applies. TDS, estimation. Estimation of tax at a fund level is a very large area because you are required to do it perpetually. I'll just add a flavor to this. What's so big about tax? So my fund of 100 has become 120. Okay. I have done a tax provision. Tomorrow that 120 has gone down to 110. What would we do? Would we add back the tax provision? Huh? Sorry?
Ideally, yes.
Yes. No, it may not be so. This is one-way engine under most of the funds. That means they will maintain it at 120 till they come back to 120. They will not credit it back. You will not add it up to your NAV. You will keep it as a provision. If at all a distribution occurs at that point, at 110, then I'll add back. Till such time I'll not add. This is prudency. And most of the PPM and the investor management agreement will talk in that line. But now you take it at a class level. So there is a share class A, share class B and share class C. A came in year 1. It is seeing the profit. B is year 2, not seeing profit. And C, year 3, is seeing loss. That means I'll do fund level tax provision, then I'll split it up into all the class level provisions before I pass on, because this has a direct impact on the NAV of a fund. Simple for CS, complex for any other mind to understand. Even conceptualize this. Okay, how can one do such a thing? Eventually, we are 3 partners, we have brought in the money. If I were to be doing it from business point of view, it's a very simple thing. But in business, I may not have a time value for money. In fund, I have a time value for money.
This would depend on onshore and offshore investors also, right?
100%.
Because withholding tax at master level it would be a provision, but at feeder, or I would say onshore and offshore, it would be different.
Yeah, 100%. So I was not bringing this because it would just add up to this. My idea is to show the opportunities which are one too many, but yes, this is very important. So depending on the investor type, the tax provisioning also changes. Many of the funds are with, yet again, Big 4, only for tax provisioning. Only for tax provisioning. RBI compliances are there Fatka, of course, I guess everybody knows it. These are simple, but yet these are opportunities for the people. There is a friend of ours sitting in a Mufassil area and doing only RBI compliances of many of the funds. Mufassil, I am saying, is not even in metro city. But he knows the business, he's got the business, and it's now going by word of mouth. These are the opportunities that you can see as far as the fund accounting is concerned. Whatever you see in domestic is also available in this. So if there is a fund in Mauritius or DFC, almost everything applies. Withholding tax may not, if they don't have Indian exposure. But otherwise, every other thing applies. What I started with, we can do it. So, our very early days experience when we were doing funds in Mauritius, and just about daily accruals of expenses, providing for it, writing back, computation of NAV, they knew as a concept. They could not do it for the sheer reason that they don't have ability like us to be able to work it through. Yeah, I am done with this. I am thankful to Borivali Central CP for this opportunity, and then of course my team for doing the research work for me, because many of this I passed through, but I am not into it. My work is still a technology. Technology provides solution to many of them. So software is a good way to go if anybody wants to get into it. But all
सॉफ्टवेयर कॉस्ट क्या रहेगा इतना
it depends on subscription. See, I'll tell you, most of the Cat 1 funds will not be able to unless you take the ownership that this is how I want to do it. So it's a risk reward kind of a thing. But most of the Cat 2 and Cat 3 should be into it, is what we understand. So, any other question?
Any questions?
If you can give us an idea of how many Cat 1, 2 and 3 funds would be right now actively working in India?
I'll show you the pie chart and the statistics, and this is available on SEBI. I'll share that link also shortly. This. So Cat 1 total is 89,000 crores, vis-a-vis Cat 2 is 10 lakhs 30,000 crores, and Cat 3 is 2 lakh 29. And this is as on March 24. Cat 3 is coming up. Probably by next year, Cat 3 will cover the ground, will be above Cat 2.
Cat 3 is open-ended, right? Anyone can come and go at their ease, while Cat 1 and 2 is lock-in.
But yet again, sorry, it will depend on to what the PPM says. So,
Okay, if PPS specifically mandated that it would be a lock-in, then it has to be a lock-in.
lock-in is there, but whether I can onboard new set of investors. So
It
what
may
the
be
fund
the
house
scheme.
will do, it will create a new scheme
Right.
and bring in
Onboard
more.
them in the new scheme and not in
Yes.
the existing one. Because tax calculation will also get complicated in that case. If they'll inboard in the second year, while scheme is incorporated in the first year, then how will you compute the tax?
So, okay, if you are doing the same thing in Cat 3, why can't you do it in Cat 1 and Cat 2? It is for other stipulation that this has been brought into, whereby you can't, but otherwise if I am doing it in Cat 3, I can definitely do it in Cat 1. The idea was more of a lock-in whereby people don't withdraw because they will not see the result. All infrastructure projects, people will not see the result. So that's where the lock-in is working. So that's how new is a separate scheme. So there are fund houses with more than 100 schemes. That's,
In the single AIF.
huh?
In the single AIF.
In the single.
So there will be upper cap. They are not followed with any guidelines like that.
There is no upper cap.
मतलब see see, you said 100 schemes I can have. So each scheme will have a potential fund. That is a limit, or how the way you say 25 lakhs से भी हो सकता है वो वाला, और एक में 1 crore is the minimum fund size. So each scheme will carry that size.
Yes, absolutely. But so wealth is coming into this space, and that is why the industry is growing, and potentially we should look into this space.
So also for each scheme will have to hire a specific manager, or for single manager can.
Not required.
Not required. Single.
So
can
for
hire.
that fund house which has got more than 100 schemes, probably there are 3 investment managers. That's it. And it's family driven. Me, Sikandar and Vijay.
That's what. Majorly category are family driven only. Family are putting the corpus into Cat 3 and then managing their capital.
Not all. There are
Yes.
professionally managed by IM. Those people who were into portfolio management would now prefer AIF. Why? Lesser reporting, lesser compliance, a consolidated AUM whereby I can play whatever I want to do. Lesser restriction. I can do futures also. I can speculate also to an extent, which I cannot do as a portfolio manager. So it gives them a lot of leverage, lot of advantage.
That's true.
Any more questions? Okay, thank you sir for such a wonderful session. Now I request our past convener Vandana Dodia madam to propose a well deserved vote of thanks.
It's really amazing to see the audience still sitting here. Those of you will acknowledge that Uday sir has touched upon something which is very unique subject, fund accounting, and the way he has presented, the person who is not doing the same can also understand, and taking this thing, Nilesh sir's floated idea, and he's actually giving an opportunity that this is also a way where a chartered accountant can venture into, and we are the very best accountant who can understand the fund accounting also. Please carry out round of applause on behalf of Borivali Central CPE. We are glad that you shared your wisdom to us. Thank you very much. Thank you, present attendees. Thank you.